The Bank of Korea has decided to keep its key interest rate steady for the seventh consecutive time at 3.5%, having reflected the latest on inflation. And it cut the growth outlook for next year to a little over 2%. Our economic correspondent Shin Ha-young explains.
South Korea's central bank has again kept its key interest rate unchanged at 3.5% as widely expected. The decision was announced on Thursday following a monetary policy committee meeting.
Despite the higher-than-expected inflation growth, a slowdown is anticipated. Considering the impact of the prolonged monetary tightening of the U.S. Fed and rising external uncertainty, including geopolitical risks, we have decided to keep a tightened monetary policy. The Board of Governors voted unanimously to maintain the current tightening stance.
For a seventh straight meeting, the Bank of Korea has decided to freeze the rate. The base rate has been held at 3.5% since February, following 10 consecutive rate hikes to tame inflation beginning in August 2021. Analysts say the central bank sees no need to raise the key interest rate solely to address soaring household debt, as it could further weaken consumer spending and investment. Meanwhile, the BOK on Thursday maintained its economic growth outlook for this year at 1.4%, while it slashed the outlook for next year by 0.1 of a percentage point to 2.1% from the previous projection in August.
Exports have been improving lately, but it'd be difficult to expect a significant increase. Domestic demand is sluggish as well. These factors led to the BOK and the IMF lowering their outlooks for next year's economic growth. Small businesses and the self-employed are facing challenges. In this regard, the government needs to prioritize the economy with relevant policies.
Consumer price growth is expected to be at 3.6% this year, up from its previous forecast of 3.5%. The BOK also raised the figure for next year to 2.6% from 2.4%. Inflation slowed during the first half of this year, but rebounded in August, and the increase lasted until last month to 3.8%, the highest in 7 months due to higher oil costs and rising prices for some agricultural goods. The BOK governor said during a press conference that a committee member who had previously suggested the possibility of rate cuts withdrew that statement during Thursday's meeting amid a growing necessity to tame inflation. The Bank of Korea said that it will maintain high interest rates for a sufficiently long period until it's confident that consumer price inflation will slow to the target level of 2%, emphasizing that it is too early to consider rate cuts. Shin Ha-young, Arirang News.